Hey everybody, I hope you and your loved ones are safe, happy and healthy. Before you listen to or watch the show, remember to subscribe and follow the Mortgage Broker Club on Facebook and LinkedIn to stay up to date with all the latest news and updates. Please note we are not a mortgage broker and do not lend money directly to clients. Remember, a mortgage and/or borrowing secured against your home or property can be repossessed if you do not keep up the mortgage repayments. The content of this show is for information purposes only and is not to be relied upon. Stay well, and I hope you enjoy the show. Welcome to the show. I am your host, Sean Rogers, and I am delighted to be joined on today's show by Andrew Montlake, the Managing Director of Coreco. On today's show, we're going to be picking Andrew's brains on all things mortgage broker and property related. Andrew, how are you?
I'm fine, thanks. Thank you very much for having me on. I'm delighted to be here.
Oh, thank you for coming on. So for those that may not know, Andrew's not only a closet rock star, but has vast I've got to get that in first. He's also got vast experience as a mortgage broker across advertising and PR, and is also the managing director of Coreco. He's led the growth of an award-winning mortgage broker business and is chairman of the Association of Mortgage Intermediaries. I'm keen to ensure we get as much value out of the time Andrew is, I'm very humbled at the time he's given away to do this for us. So with the time we've got available, I want to get as much as we can for both mortgage brokers and a wider audience. So we'll jump right in. Andrew, what are the areas of business that you enjoy the most, and what aspect of your role do you least enjoy and why?
That's a good question. Look, at heart, I'm still a mortgage broker. So I love that, talking to clients and picking up the phone and not knowing who you're going to be talking to, basically. I quite like that excitement of helping people. But as I've got more involved in the business and now running the business, I love I've always loved the marketing side of it and PR. I'm quite gobby, so I quite like giving my opinion, whether people agree with that opinion or not. So I've always enjoyed the marketing side of it. I'm passionate about brand, really passionate about the customer journey, and passionate about the industry. So I love that side of it. But I also love leading people, and I really enjoy the strategy areas, really trying to work out where we can take Coreco and what we can do in all that strategic areas, and just working with a fantastic team. Some of the things that I dislike, I guess everything's part and parcel, isn't it? There's always going to be hassles, there's always going to be stresses, there's always going to be issues that come out when you least expect it. And I guess some of those are the things that sort of grind you down. You might have some weeks where everything's running smoothly and it's all great, and then you might have another week where it just seems to be issue after issue after issue, and that could grind you down a little bit. And those are the bits that sometimes I struggle with a bit. The workload generally is something that I struggle with a bit. But look, we've got a great team at Coreco, and I'm really blessed with good people around me who can help me through the harder times.
Yeah, I just endorse that before we move on the basis that I always think it's hardest when you've got multiple third parties that, let's say, aren't doing what you expect them to do, or you could argue maybe aren't doing what they should. And to a huge degree, that's completely out of your control. And when that's happening, what feels like every minute of every hour of every day, and that starts to build up, things aren't going on, especially if you're MD or CEO or whatever. If it's your operation, it's within your control, because you've got, onboard and training, recruitment, systems, etc. That's kind of, maybe not in the short term, you can't change that necessarily. Perhaps you can, perhaps you can't. But when it's so many third parties, and I think that's one of the things with mortgage brokers, I think, from looking from the outside in, is there's just so many different third parties that you have to liaise with, and not just from a mortgage application point of view, but when you talk about your brand building and your leads and your website, and then your compliance, and then the FCA, and etc. You've just got multiple third parties where, like you say, that kind of grind or albeit frustration can just mount up. So
yeah, absolutely. It's people who don't respect your time really bug me. That's one of my bugbears at the moment. And people who don't do what they say they're going to do.
Yeah, here on that, definitely. You built a fantastic brand whilst scaling the business, obviously generating sales. Many people struggle to do both, and it's a huge thing to try and get your sales in, scale the business, and also build brands. So what would your advice be from your experiences? What would you say, almost looking back, about how you can increase sales and build brand?
I think one of the first things I learned very, very, very early on was about authenticity, and be authentic and true to yourself. We are all different. We all have a slightly different approach. Once you try and start copying something just because you think that's the way to do it, sometimes you can lose your authenticity. And there are some fabulous people in this industry. There's some amazing companies. Be proud of what you do, what makes your company good, what's your little remarkable difference, and build on that. I still see it all the time when you look on social media and you can see some people talking about this, that, and the other, and you just think, I know why you're saying that. It's not really you. And that I think clients and potential introducers can see through all that now. So it's all about being authentic. Also, always remember who your audience is and who you want to target. You can't just go out there and just say, right, I'm going to target everyone. Think about who your typical client is, who you want that through the door. And that's something I've always tried to do whenever I looked at building the Coreco brand. It was very specific what we wanted to do. We really wanted to not dumb down the process, but really talk to people in a really down-to-earth way. And one of the best bits of advice I ever got was my first ever BBC radio interview, where the interviewer just said to me before we went on, he just said, just remember, it's two blokes down a pub talking. And that was brilliant. And that's how people engage. They just want to hear that. They don't want jargon. They don't want complications. They don't want you to make promises that you're never going to keep. And if you're going to say you're the best broker, why? How are you the best broker? Why are you? And really try and paint pictures around why we do that. We sort of went through a period where actually, do you know what? We're not going to make any promises. All brokers say they're the best broker. Have a look at all our client testimonials and you decide. And actually, we got our clients to do our marketing for us. Excuse me. And it's just being true to yourself and never lose focus on your service to the client. That's what's really, really important. It's all very well spending loads of stuff on marketing or PR or going out there. If your process in the back end isn't working, if clients aren't being dealt with properly and efficiently, then that's going to come out. So all we tried to do was do things a little bit different. We were very early adopters of social media and of podcasts and things like that, and just try and be really down to earth. And I think that's all I'd say to anyone is just be yourself. Don't be frightened of being yourself. And a personal brand can grow with a company brand in a very similar way. And myself and our last MD, I think Coreco became the sort of the bastard love child of the two of us and our personalities, and that's how we created this Coreco brand, which is something that I feel it's my baby. So it projects how we feel and how we feel as a group of people within Coreco.
Yeah, just on that note, I think the next episode we make sure we are in the pub and getting it recorded there. For those listening to this, not watching this, we're on Zoom.
I'd love to do, yeah, I really want to do a series of podcasts where it's down the pub with. So maybe I'll do one with you.
Definitely. And I've spoken to quite a few people who, when they scale their businesses, and that's something I heard Gary Vee say recently, actually, in an interview where he said, the more I scale my business, the more time I spend in HR. And with the growth of the business that you've obviously had to recruit over the years. You can clearly see at Coreco a fantastic culture where, you know, your colleagues are talking openly about there being no egos, a client-focused approach. You know, what are the key factors for creating that culture and then also maintaining, you know, a healthy culture in the workplace thereafter?
Culture has to come from the top. It has to come from the people running the business. They have to live and breathe it, and they have to believe it. Sometimes there's a bit of tick box in terms of culture, and then you might see some of the owners of the business or some of the directors. It's a bit of do as I say, not as I do, and you're not going to embed culture correctly into the business if that's happening. So again, what we did was we actually involved everyone. So we were very passionate about how we want Coreco to be. And then we engaged with all our workforce. So we had a couple of sessions before we did our latest rebrand a few years ago of around, okay, what does it mean to be Coreco? What does it mean? What does a good practice look like? What are our values? And we condensed all of that into our DNA. So we literally have a 11 point DNA. Which we then linked into our bonuses as well. So actually, bonuses aren't just about sales. It's about living and breathing the Coreco DNA. And that's not just treating our customers fairly and making sure that we deal with them properly, but it's also respect for each other, diversity, opinions, listening to each other, and all of that, and that culture is embedded into everything we do, and we try and project that out. It is a battle. It's always something you need to keep looking at, and once you've defined that culture, then recruitment becomes a little bit trickier and easier at the same time, because you know what type of person you want in the company. It's not just the next big sales writer, because the next big sales writer could come in, and if they don't match the Coreco culture, they're gonna cause more problems. So actually, it's all about recruiting people who we know would fit within our DNA, and that's one of the discussions we have. Are they a good fit for Coreco? Not just are they good at their job. So it's something that you have to keep looking at and keep reviewing, and people are bored of me talking about our DNA and our culture, but it's something that I'm passionate about, and so that's something that you have to embed within the company, but involve everyone. I don't think you can quite dictate it. You need everyone to take ownership of it as well. It's not just my culture, it's our culture.
And I mean, the last 12 to 18 months has been absolutely unprecedented for everybody. I mean, what are the biggest challenges you faced at Coreco, and then how did you react, or how did you meet those challenges?
I think we're still struggling in some points. I think everyone is. It was strange. As I say, going back to culture, you've got this environment where actually you go into an office and it's buzzy and everyone's helping each other, and you've got the music playing and people are on the phone. And then suddenly there's nothing, and everyone's spread around. And not only are people unsure about what happens to their work and can I work okay, but there's also a health crisis as well. So they're worried about that. So it really is unprecedented times, and trying to keep everyone bonded and together and still have that Coreco spirit is hard. It's something that you have to work at, and you know, as I say, we're lucky we've got great management team, we've got great people. We do try to do that, as much as possible, but there's only so much you can do via Zoom calls, and you had our Christmas party out virtually, and it is quite difficult. So getting back to face is going to be great. But then you have the issue now, which I think most businesses are facing, is how much do you come back into the office? Do you tell everyone they have to be in? But actually things have changed, so there has to be some flexibility. So I guess that's part of the big challenge now, is how do we work efficiently, share knowledge like we used to do, and keep that culture and buzz on a hybrid situation where actually maybe people are only coming in 2 to 3 days a week. And then is that the norm going forward? So every business has to adapt now. And that's part of the challenge. That's probably the biggest challenge at the moment.
Yeah, spot on. I mean, something that doesn't look like it's going to go away is the whole thing about kids being, you can have situations where one child is going into school, say, and the other child is at home. So you've got two challenges. You've got two school runs that still need doing for one child. But even if you've got childcare, knowing that the family home have got a positive test in there, some people, that might affect childcare as well to a degree.
Yeah.
But then you've obviously got people who are saying, not only do I need to work from home, but on top of that, I need some flexibility within that time frame, because what do I do? Does that mean I have to take the day off? Does that mean we say you can be flexible during the day? And that's before you even go into situations where in the workplace you might not have the entire workforce double vaccinated. Is that something that employers even want to go near? In essence, in terms of they may not have a choice, because staff may bring that to them as a management team and say, hang on a minute, we're all double vaccinated. Or, for instance, I might be a vulnerable person, for instance. I don't feel comfortable coming in unless I know that everyone's double vaccinated. But then how do you even find that out as an employer? And then what happens to data in terms of that? Because that's the most sensitive data ever. And then just because people say it, people could say, well, how do you know? And I suspect most employers are going to go, because of GDPR, we're not going near.
Yeah, it's a really tricky one. Yeah, it's a really tricky one. I mean, we keep we're very open about talking about it, and if people are uncomfortable, then they can voice it. Mental health has been a big challenge, and I'm pleased to see that as an industry we're starting to do better in confronting that and talking about it and dealing with that. And that's something that I've noticed on both sides of the fence. You've got the mental health of people who are too scared to come in because they might have vulnerable family members or themselves. And you've also got the mental health of people who need to come in, who want to come in, who can't work in that home environment. So it's quite interesting. And that's one thing we've just recruited someone who is going to be taking on our HR role. And one of the first things we've implemented is a mental health policy. And that's something that I think is really starting to help people actually knowing that there's something there, knowing we've got a policy, knowing that we're listening to them. It's not enough anymore just to say, oh, man up. It's just not enough. It's not good enough. And that's something that I think the industry is starting to take on as a big challenge around on top of other things like diversity and like those kinds of things. So there's some interesting challenges now, but business is always that. There's always something. There's always a challenge. I did joke with my business partner the other day, it'd be nice to have just 1 year where it's just nice and smooth and constant without anything else happening. But if you think about the last 4 or 5 years, it's been extraordinary. From Brexit, the pandemic, it's not been a long period where actually you can just get on and run the business. It's always been something else, but I guess it was ever thus.
Indeed. And just, here and in respect to the mental health aspect of that, and I think that's absolutely fantastic from a Coreco point of view as well, both with the appointment and with the implementation of that policy. According to the latest research, from Iris, around 90% of mortgages went through mortgage brokers intermediaries last year. Now that's up substantially, from 77-ish% the year before. Now, doing a bit of research, many believe that will continue to increase in future years. Why do you think this is? Or do you agree, firstly, but why do you think it is? And how can mortgage brokers then capitalise on this?
I think we've seen that trend over the last few years, and certainly with the pandemic and the fact that there's so many branch closures and lenders have struggled for a bit with staffing. It's no surprise that actually it's gone even further towards brokers. I think what brokers have is they score highly in trust. And I think people understand more and more that actually when you're about to take on the biggest loan you're ever going to take out, especially one that's connected to your home, you need advice. And I think that message is getting out there better and better. And that's something I still think there's a long way to go. I think if you ask, it's quite interesting, if you ask, probably stop 10 people on the street and ask them to, what a mortgage broker is, then I do think a lot of them won't be able to explain it or actually really understand what we do. But when they're actually looking for a property, when they start along the journey, we know that a lot of people probably start online, think they can do it themselves, maybe talk to their bank, and then get disheartened because there's so much information or it's not moving quickly enough. And then they will actually speak to someone who go, oh, do you know what? I used a broker, give them a call. They were really good. And then they'll find the world of the broker is a lot slicker. It's a lot more professional. And actually that everything is explained in a lot better way. And they get that benefit of advice. So I think we're in a purple patch as an industry of mortgage broking. And it's up to us as an industry to make sure that we don't lose that we do deliver, that we do embrace technology where it's there to help us, to help the customer journey. Technology shouldn't be to replace the broker. I think we've proved, you saw the likes of Habito, Trussell, etc., come into our industry saying, yeah, we're going to change it. It's all going to go from A to Z without talking to a broker and technology. But very quickly they changed their tune from we're all about tech to actually we're people powered by technology, and that's really been what we've been about. So it's not surprising where it is. Whether it will stay at those high levels, I think we do have some challenges to come in the future as lenders do start to get their act together. There will be more of a battle around the back end. Lenders are starting to realise that actually they're getting all this business in the front end, but then letting it go at the back is not good. So as they improve technology, they'll try and retain a little bit more. But then also they know that actually the broker, even though they're paying a prop fee, the broker channel is quite a cost-effective way of distributing their products. We do all the marketing for them. We take the advice risk. So actually, I think these levels will be sustainable for some time yet, but we can't afford to rest on our laurels and just assume it will always be that way, because we don't own the clients. The lenders don't own the clients. It will be the client's choice. And we have to make sure that we're doing the right things and we're front and center of those clients a lot earlier on, and we're better at retention. We're better at keeping in touch with them, and just giving them a call every 5 years just before their rate expires is not going to be enough going forward.
On that point, I think two things. I think one, from the perspective of the mortgage broker aspect, is the big uniqueness that you have as a broker is that quality of service. That you should never lose to what is in essence a big multinational, almost PLC. And even some of the biggest mortgage broker operations, like even if Amazon wanted to come over here and play, which there's all sorts of things going on in America and Nevada in terms of Amazon partnering with real estate operations, because whoever wins voice will win. So there's a race on between Google and Amazon as to who's going to get voice in the walls in people's homes. Because once I've got voice in the walls of my house, if it's Amazon, Google isn't getting in there, and vice versa, and anyone else who wants to play in that game. So the rewards to the victor of that, I don't think the world has ever seen. Could put a figure on the potential rewards for voice in this decade. And when you go mortgage broker on voice, Google and Alexa will dictate who appears.
That's right.
Not 20 brokers on the first page of Google. So the only what I believe, I would say mortgage brokers generally are as bad as the legal industry traditionally of closing the file. And yes, they might get the word of mouth, but the post-transaction engagement,
totally agree,
isn't good enough. And I think it you've got to make it a must, not a should. But the ability to, especially in the local community, the ability to engage in that community, to do your non-religious festive cards, to know when it's people's birthdays, you've got the data from the application at the end of the day. As you say, to know when to reach out to them, to lend that hand, and also all the other things that you can potentially help with, depending on what skill set you've got within your firm, or even if you're a sole self-employed broker. It could be equity release, it could be the protections, it could be the insurances, and there's loads of other things that you can potentially help with, which could be referral and just getting to know them and touch base with them and so forth. So I think that post engagement is going to be critical, because with the banks, I also think we've gone through a unique decade where, our parents and even grandparents, their relationship with the bank manager was a personal. That was it. If you need money or there's a situation, you go to the bank manager, and then you trust whatever that bank manager says. It was almost like the family solicitor kind of role. In the last decade, I could go on we won't, but I could literally go on for the next hour about, and some of them aren't even that well reported, about issues with the banks lending. Look at the missale scandals that have gone on. Then you've still got that bad feeling of, which you can make a big case has been maybe wrongly broadcast, but about like banker bonuses post-recession, and this thought process that the City of London is almost like the stockbrokers of the mid-80s kind of almost culture. And I think people now don't treat the bank in such a way, and the bank don't have that brand relationship with your advisor or an individual. They're in essence faceless, aren't they, in terms of who you
in a lot of cases, and that's,
and
just
that they're not going to
pronounced.
recommend a third party nationwide. They're never going to tell you, do you know what, I think you might be best going to Kensington. So we're now in a comparison world, aren't we, where everyone just wants to go online and go. And the other problem is, I also think mortgages, again wrongly, that it's seen as a commodity. I think it's a lot like legal services, that once you start seeing everyone with 5-star reviews, then you're into price, unless you've got that word of mouth or that personal relationship with someone.
And that's our battle as an industry. We can't allow, and it would be wrong to allow, mortgages to be defined as just another commodity, because they're not. They are much more complex. There's as I said, it's the biggest loan you're ever going to take out. The costs of getting it wrong can run into thousands of pounds, or ultimately losing your house. And that's something that we as an industry have to battle against. You can't commoditize mortgages, in my humble opinion, in the same way you can as credit cards or smaller personal loans, etc. Price is not everything.
Yeah, I completely agree. On the remortgage side, like remortgage numbers have dropped massively. So like solicitors' firms have seen an enormous increase, particularly in purchase, but remortgage departments in some places 60-70% down. Now, or you can make an argument potentially for free legals and so forth, but nevertheless, I do think because of the way the market is, the ability to do a product transfer, if you like, with your existing lender because of the convenience, I think there's a big opportunity to do an education piece on why it's so important to just go and get that, if you will, free consultation or initial consultation with a broker to actually access the whole of market on something like a remortgage. Because I think that's an area where mortgage brokers can educate a lot. In terms of adverse credit, there's been an increase in queries in that over the last few months by mortgage brokers. I find it interesting, though, that lenders seem to be opening up criteria at a time when many are predicting increased affordability struggles in the future for families. You've got the cost of childcare, which is immense already, increasing. All the talk about energy bills, you've got the end of furlough, and they're just three areas of concern. How do you view adverse credit within the market with an eye on next year? And is it an opportunity for brokers to scale in maybe a sort of niche area, or would you think that's something to treat with extreme caution?
It's something I've always treated with extreme caution. Adverse credit is, I think it will be on the rise. It has been for a while. If you look at the number of CCJs that have been, I think I read somewhere that there was something like in 2019 or 2020, there was something like 1.2 million CCJs registered against people. A lot of them for small bills like mobile phone bills, 25, 30 quid, etc. And that just comes down to education of people, and actually, financial education is poor in the UK, in my humble opinion, and that's something that needs to be addressed. But it is interesting. We are seeing that there are people who have got into slight difficulty, and actually, if they're in slight difficulty for whatever reason, like a life event, so divorce or death or something like that, then actually there should be options available for them. That you should be able to help people. That, if someone's genuinely just missed the odd thing here and there, then okay, you should be able to help them. And it's no surprise that you're seeing some lenders looking at this area, because it's all about margins. And especially if you're a specialist lender or a challenger bank, how can you compete at the moment with the big six who have got tons and tons of cheap cash to lend out? You can't go in with a fixed rate below 1% for 5 years if you're that type of lender. So you need to look at other areas and more underserved markets where you can help people and achieve margin as well. So you're taking a little bit more risk. So that doesn't surprise me at all. It is an opportunity for mortgage brokers, but it's about having that in their armory. And every good mortgage broker should have all these things in their armory, where actually if you have someone who's got a little bit of adverse and you know which specialist lenders to go to, you understand that you can help that person. But it's also being strong enough to say, do you know what, I could help you, but I don't think I should help you, because actually you need to get this paid off first, or actually, and I'd like to see more advice from brokers in that respect. And the good brokers will always do that. I always remember one of my biggest referral chains back in the day was from a couple who I said I wasn't going to help, because I felt, although I could do it, I felt they were stretching themselves too much. And they took my advice, and I think it was the best thing they did, and they referred loads of people to me. So it's all about that. So I'd always say that approach with caution, and make sure that if you are advising in that area, you do really immerse yourself and become a specialist in that area, and really understand all the different options available.
On that note, have you seen an increase in guarantor mortgages, joint borrower, sole proprietor, and how do you and Coreco keep on top of the changes to those products, and also the amount of criteria changes, especially in those kind of areas that must be going on?
Yeah, I mean, again, it comes back to sharing information and making sure we all get the alerts from from the lenders. We have a weekly sales meeting where we'll share different changes and point out things that others might not have seen, and keeping in touch that way. We do use things like Knowledge Bank and Legal and General's version as well, which is really good. Both of those are really good for keeping up with criteria. So yeah, it is tough. It is tough to keep up to date with it when you've got something like 90 to 100 different lenders and something like 10, 12,000 different products. Lenders can help more. I hate seeing lenders bury their changes at the bottom of rate communications, which doesn't help at all. It's I think if lenders are changing criteria, don't hide it. Just explain why you're doing it and put it front and center so everyone understands. It avoids so many more questions and calls into the lender when something goes wrong. And joint borrower sole proprietor is something that has grown quite a bit. We've seen a lot of it being a London broker. It's something that we've done for a while. And it's good that there are more choice available in that, because there are loads of different reasons why that might be a good option for a borrower. So I think that'll continue to be something that'll be a growing part of the market.
And the latest data suggests that there's going to be, I think it's the highest ratio ever, that there's going to be over 50% of borrowers 65 and above still with a mortgage. So in terms of like lifetime mortgages, equity release, a lot of people are predicting both short and long term a boom in those areas. I can well see many reasons why the banker mum and dad and potential equity release is going to come in over the next few years. One, because of rising costs, as we've said, especially for families, people wanting to get that deposit or do something with the house. Maybe that becomes an issue. And also businesses may become tricky, redundancies, potentially the advance of technology, AI, this decade, people need to potentially retrain. There's loads of different reasons why I can see the banker mum and dad. One of them being pensions. The banker mum and dad, issues with equity. They might want to take voluntary redundancy, haven't got enough in the pension. IFA wants to refer them to a mortgage broker. Do you think mortgage brokers who aren't in the equity release space need to start looking at that and taking the relevant exams or bringing people in to do that? Or is it better to just stay tunnel vision, stay in your niche and sort of drill one hole and dig it deep, so to speak?
I quite like specialists. I think it's quite, I think with equity release, it can be quite dangerous if you're just dipping in and out of it. It is something that is specialist. It is something that you need to really, really know your market. You do need a really, really good process. It's something we don't do, for example, at the moment, but because of that, although we are looking at maybe getting specialists in that area. I think it's a really interesting area. It is something that is going to grow, definitely, with an aging population. But I think the industry itself in equity release needs to change a bit. It needs to become a little more open. It needs to, some of the pricing, which has improved a lot, could still maybe get a little bit better. And I think some of the proc fees paid are way too high. And I think people need to get into it for the right reasons. So, for example, if a broker comes to me and says, I really want to get into equity release, I always ask why. And when they say, I've had a really great conversation with someone who said, oh, well, I was talking to my nan the other day, I really like helping old people, etc. Great, good reason. Too many people still say, have you seen the proc fees? You can earn a lot more. That's a wrong reason to get into it. And that worries me. So I think there's some way to go for that market. It's got a lot better over the years, but I still think there's some way to go. But if you are looking to get into it, then I think it's something that should be a main part of your business, not just now and then I'll dip my toe into it, because I don't think that's the right way to go.
And a lot of mortgage brokers have the issue of ongoing. Do a stay AR, go DA. So we go DA, AR. Your AR, I think you always have been AR. Forgive me if I'm wrong on that. Why do you continue to remain as an AR? Like, what do you think the benefits are? If there were mortgage brokers thinking about that, listening or considering that, what would your view be?
It's a great conversation, this, because so I was always a DA. So for most of my working life, I've been a DA. When we set up Coreco, we got involved with Mortgage Advice Bureau and Peter Brognicki, and actually when we set up it made sense for us to be an AR, and it has made sense for us to be an AR from a personal perspective up until this point. It's something we always look at and we always think about, and the onus is not just on the business but also on the principal. So actually, we always look at actually what do MAB add, what do they give us, why should we stay with them? And to this point, they've always added more than actually staying with them than actually setting up a DA. So it's something that is individual. I don't think there's a right or wrong. I really don't. I think a lot of networks can help by being more transparent about their costs, their fees, and if you do want to leave, their procedures for leaving. And I think that can help. But actually, there's no right or wrong. There's no you're better off being an AR or you're better off being a DA. The truth is there's a place for both of them. They're both just as important as the other. The networks do a fantastic job in a lot of instances. MAB have been fantastic for Coreco. I can't fault them at all. And it's an individual choice. So it might be that one day we get to a position where actually we think we're better off DA, but we're not in that position yet. And likewise, someone might think, actually, I'm an AR at the moment. I want to go and set up my own business and be a small DA. And that's fine. That will suit them. It's just about really, really understanding the options and working out which one works best for you. There is so much regulation out there. There's so much compliance. There's so much changing. There's so much coming down the line from the FCA that sometimes having someone bigger, badder, and uglier than you on your side can really help. But likewise, don't be afraid of the FCA. They are very helpful for small DAs. They are there. They're not the fire-breathing dragon that people think they are. So it's a typical sitting on the fence answer as you'd expect, but there's room for both, and I think both sectors will continue to be strong over the coming years.
Yeah, the indemnity insurance market, I think, is going to be a key player in that. And
yeah, that's going to be very interesting.
Yeah, that's a tough
I think what we have
right
to
now.
keep one of the biggest issues is going to be around fees, FCA fees and indemnity, and that will help. That's something that I worry about, and I think that we worry about as Amy is making sure that those fees do not get too draconian and become barriers for entry for smaller DA firms that actually mean that people leave the industry because of it, or firms have to shut because of it, and that's not what should happen. We have to make sure that all the fees that are charged are proportional and they're justified as well, and that's something we continue to battle for.
Yeah, I'm SRA regulated and FCA regulated, and let's just say I prefer the one that begins with a F. But so anyone who's a mortgage broker who thinks they may, the regulator might be anything other than, let's say, okay, yeah, I can definitely, I prefer that one. What are your ambitions to wrap up? What are your ambitions for 2022 and beyond? What does the next 12 months hold for you and Coreco, Andrew?
First of all, survive. And get through this. Look, we've got some very clear ambitions. We've got a really clear plan about what we want to do as a business, and how we think we can take on the future and how we can grow. We're looking at growth, not just for growth's sake. It's all about growing profitably and carefully. We've just opened an office in Southend. We're looking at growing our network and actually making Coreco a truly national broker. We want to be a destination where brokers could think, actually, do you know what, that's a brand that I really like its values. That's somewhere I can see myself working. And likewise to engage our customers that little bit more, to continue our retention plans. We're a big believer, to nick a phrase from a well-known advertising agencies, to find people, to grow them and to keep them. And that's not just staff, that's also clients and introducers, and that's sort of our ethos. So we do have some really good plans. We need to develop our website a little bit more and be a bit better there, but there are loads there's always something to do. We've just taken on Nick from John Charco, who's really going to help us and free up a lot of my time to really start working on the business rather than just in it, and really to drive that plan of where we see the future. So it's exciting times, and I'm really looking forward to the next 12 months, actually, as long as we're not in a lockdown and I can get out of this. I don't want another 6 months stuck in my Harry Potter-esque cupboard under the stairs office. It's great to be able to see people face to face and engage with them more. And yeah, so I think it's going to be a tricky year, the next 12 months for brokers generally, but there's a lot of positives there. And for the brokers that really go out there and embrace it, really look after their clients, embrace some of the new technology that's coming through, then I think it's a really rosy future.
And thank you. And that's it for this week, everyone. Andrew, thank you so much. You've been an absolutely fantastic guest, and thank you to everyone who's listening or watching. If you want any further information on Coreco and Andrew, please check out the links in the show details below. Please share and spread the word about the channel. And if you're listening on Apple Podcasts, please hit us with a 5-star review. But more importantly, please stay well and take care.